down at least 400 points up. Got it. David Strzelecki joins me now. All right, David, have we had enough pain to make the Fed back off from rapid rate increases?
Good morning, Stuart. I don't believe that we have seen enough pain because we've not seen enough of Jerome Powell's talking points come to pass yet. It is interesting, though, that just yesterday, two very specific things happened that were interesting. One is that the 3-year and the 10-year Treasury inverted. Powell specifically pays most attention to that, not necessarily the 2 and 10 like we've been talking about, but the 3 and 10. And so that could be, a potentially dovish type of a thing developing. Also, the Bank of Canada, which if you read how they look at things, they were supposed to raise 0.75 and they actually just raised yesterday 0.5. So maybe this could be signaling of a pause that could be coming in the Federal Reserve.
Well, that's
I know this much. Yeah, well, the Federal Reserve certainly knows how to, and these central banks certainly know how to pause. They know how to go backwards. But, the real question is, have we done enough to get down to the quote unquote 2%, inflation that we're going for? And have we got to a terminal Fed funds rate that's going to be consistent with Jerome Powell's thesis, which we are a long way off from that.
Okay, got that. Now, what happens to the market if the Republicans sweep Congress 2 weeks from now?
Well, I think that we're seeing the rally today as a result of some of those ideas being priced in right now. Just like your last guest shared, there's typically a rally that follows these midterm elections, and specifically times where we go from, where one party has clear understanding of where they're going, and maybe it's not as positive for the nation, and then we get a mixed bag. Obviously the president would still have veto power, so it's not an all-in Republican agenda at this time. But I don't think that it's going to be long-lasting. In fact, very short-lived because of all the economic headwinds that we've got coming at us right now. And so if the Republicans get it, this would be, obviously a nice change of pace, get the nice upside in the market, which again, I vote it goes up forever. But here's the reality. What goes up ultimately does come down, and we have big credit issues that we're facing, geopolitical challenges. I mean, recessions are one thing, but a global recession, this is very unique. And ultimately, we could be looking at this series of time as the great global reset, specifically because debt is changing and the consumer is getting a lot weaker than we've seen in the past.
Last one. Are there any of the big tech stocks that have been so hugely beaten down? Is there any single one of them that you would buy?
Well, Stuart, I'm a big fan of a hometown team here, Microsoft. In fact, I think that we're allocating to our portfolio here today with some of our cash position. Again, this is short-term type of thinking. I do like them long-term, though, but we are cautiously optimistic, a little bit paranoid, if you will, given kind of where we are and how choppy things are today.
I'm scared.
So good news on Microsoft, maybe.
Look, I'm scared of that. Microsoft has just dropped below $230 a share. Right now, it's $228, down another 1.1%. It's surprising to me and shocking to me, but it's happened. David, thanks for being here. Always a pleasure to see you again later.
Thank you, Stuart.
I want to start looking at the movers with PayPal.